consumers are cancelling precautionary savings products as insurance, medical aid and funeral policies, and it's all due to the current economic climate. That's according to a survey by Infoquest. It's a South African online research company. The data shows that South Africans are willing to take financial risks due to the high cost of living. Let's unpack their findings this morning. We're joined by researcher Lynette Nicholson. Lynette, it's great to talk to you. Thanks very much indeed for coming on. I mean, it's not ideal, right, to be cancelling your precautionary savings?
No, absolutely not. But I think that, obviously with the financial pressure, and we're seeing it across all categories, not only financial. We've just done a survey on food items as well. South Africans are really, really financially stressed. And I suppose you kind of look at all your expenses and see where you can cut. And unfortunately, on the financial precautionary savings side, we are seeing that has been affected quite significantly. Yeah,
no, it's absolutely understandable. But long term, obviously, things like medical aid, funeral policies, insurance policies, cancelling those now will, of course, they might have a big effect later on.
Absolutely. But, I think also South Africans at the moment are living, I think their time horizons are, let's get through today, let's get through this week, let's get through this month, and not looking, and not being able to really look that much into the future. But absolutely, what you say is correct, and the consequences of not having those savings, unfortunately, will have a dire effect later on.
So let's take a closer look at some of the other findings in the survey, Lynette. Insofar as the biggest losers, insofar as cancelling those precautionary savings, how do they rate, sort of top down to bottom? Yeah.
So the top one is household insurance. And I'll talk about that in a minute now, just unpack that. And then secondly is medical aid, and thirdly is funeral policies. And then it goes down to the others. Those are the top three where consumers have indicated that they are cancelling. So I think one also needs to look at how easy it is to cancel or what effort is involved in cancelling different policies. And I mean, you and I know that to cancel a household insurance policy is relatively easy, right? Mm-hmm. You phone up the provider and stop. And if you want to start again in 3 months or 6 months, it's relatively easy. So we do find that the ones that are kind of easier to cancel are near the top, which makes sense. Medical aid as well. One can do that fairly easily. Yeah. You do find that hospital plans is further down the list. And I think that's because they're cheaper, right, than medical aid. So less people are cancelling hospital plans, but medical aid is second in line. And then funeral policies as well. To cancel that is fairly easy. When you come to the policies that are more difficult to cancel or have have penalties involved, like RAs, life insurance, etc., those are further down the list.
Yeah, I suppose, as I'm just taking a look at the list that you're describing now, as we go further down the list, education policies, that's a worrying one, right?
Yeah, it is a worrying one. Yes, of course it is. But we also need to understand that some people don't necessarily saving in educational policies, but they save discretionarily for their children. So we don't have that reading. But certainly, all those percentages, right down from 10 to 4 or 3, which is the bottom one, are all fairly significant if you think about the effect.
Yeah, absolutely. Now let's go on to what I think is probably the wiser discretionary spending that we're seeing more people cancel. Maybe gym memberships doesn't fall exactly under that, but DStv perhaps is one of those luxury items that we can do without.
Yes. So we classified them as entertainment / leisure contracts, and I think those are. I think both of those are kind of luxuries to have. So those have higher proportions. So we saw 23% 1 in 4, let's round it off to 1 in 4, cancelling a gym membership. And then just less than 20%, I think it was 18%, cutting or cancelling DStv. This isn't the first survey that we've seen with DStv taking a bit of a knock. When we did a similar survey last year, we started seeing this trend happening already. And people, you can understand, people are changing to Netflix, they're streaming. I think what we did find was quite a lot of people that are keeping DStVs because of the sport. So the sport channels are, the real sport fanatics. But otherwise, people are looking for other ways.
Yeah, absolutely.
Yeah.
No, I can definitely relate to that. Still, when we look at the consecutive interest rate hikes we've seen over the past few months, I think if we count them all together since 2020, Tumisang Glovo, our business anchor, will rectify me. But essentially, we've had 10 consecutive interest rate hikes. Some people are now faced with their mortgage payments double from when they first bought their house to June in 2023. It's clear why there is such pressure on consumers. The price of food, if we take a look at eggs, milk, just basic foodstuffs, also increasing drastically. But we have to recognize the incredible risk that comes with this avenue when it comes to trying to cut down your budget.
100%. And I'm not a financial advisor, so I can't give financial advice, but certainly the pressure we understand, but as far as possible, I suppose the call or the action is to rather try and cut down on other things than these precautionary savings categories, if possible.
Yeah. I'm seeing retirement annuities as well, getting about 5% there on your graph of what people are trying to save on, Lynette. It's a shame, isn't it? Because you're probably going to get a massive penalty if you pull out of your retirement annuity early. You've already paid so much into it. That goes for funeral policy as well.
And also for life. So life policy. So, some people, you can't really cancel a RA. You can stop paying. All right. So that's what people are referring to there. Which is absolutely. So what does that mean? And we know as a country that we don't save well, generally, and that we are ill prepared for retirement. And that's kind of a general, we know that already. And then, cancelling savings for old age or for retirement is yes, as far as possible, that is something that should be avoided at all costs.
Yeah, absolutely. And again, just kicking the can down the road insofar as the challenges that will come as we get older as well. Lynette Nicholson, let me thank you for your time this morning. She is a researcher with Infoquest, a South African online research company. Their data is showing that South Africans are making some tough decisions to try and survive in these tough economic times that we're all facing. Lynette, thanks very much indeed for joining us.